Today, we are talking about Bitcoin, Ethereum, and Tether Dominance. I'll also have an update on my trade and the latest on the S&P 500 to see what the US stock market could be telling us about crypto. And for a limited time, guys, I do want to point out too, this video is sponsored by BloFin. And for a limited time, when you use my link, you can get a $300 deposit bonus with them. And I've been trading with them for over a year. They're a great option if you're in the US because they are no KYC. And also for a limited time, we're taking registrations for a trading competition with a $10,000 prize pool. So see the two links in the description below. First of all, sign up with BloFin, grab your $300 deposit bonus, and then also register for the trading event that has a $10,000 prize pool, which kicks off in about 7 days. All right, guys. So looking at the Bitcoin chart, daily time frame, we've talked about all this in previous videos. And so far, if you have seen those videos, hopefully you've made some decent money, despite the fact that the market is sideways because it has played out really nicely. So what we talked about back here, and I've been talking about this on X as well throughout this move, but you can see these range highs back here from December and January. So we had this level here at 106.6. We also had the all-time high, the previous all-time high at 110. Now we had the failure at 110. So close above, close back below, resistance through here. And this right here is a confirmed, fake out or deviation, call it what you want. Essentially, whales and institutions are using liquidity above this high to fill their short positions. And then we had the failure here at 106.6. So this is what we've really focused on here recently, and for good reason, because if we just take a look at this and keep it really simple, okay, you can see here that going back here to this low down here around mid 70s, this is essentially the range for Bitcoin, okay? Now 92K is the mid-range of that. So this level here in the middle here at 92K is essentially the 50% of this range. Now, if we take a look at this range up here, let's just focus on this for now. Okay, so this was our range last year into early this year. Now we had the break below. We had the reclaim back here at 92K. That was significant. And now we've had the market, Bitcoin fail here at 106.6. All right, again, this is the top of that range, guys. We've had the market drop back within it, okay? So anytime you see that on the high time frames, typically that is a significant event. It's no different. Okay, it's no different than back here when BTC reclaimed 92K back here. Okay, again, it dropped below, it reclaimed it, it rallied. Now we've had the move above, it's dropped back below, and now the question is, are we going to get that pullback, okay? And this is what we've talked about in previous videos. I mean, it's really as simple as that. None of this stuff is ever that complicated, or really, it shouldn't be complicated if it is a decent strategy or a decent style of trading. So looking here at BTC, right? Let's walk through this because in the last videos, what we talked about was this area around 104.8. So you can see the back here, we had these closing prices through here. We had the market drop below it. We had the reclaim above on Sunday. Monday held it. Tuesday retested 106.6. So this retest right here is what I was calling for on X. Even yesterday, guys, when the market was down here in this area, I talked about the potential for a quick move up here toward this level, because there was liquidity building there. This was also obviously the top of that range we just looked at, okay? So this was a significant retest here. And so far, I mean, really no follow through either way, right? We've got Bitcoin just going sideways here. And a lot of that has to do with what's going on in the stock market, which we'll talk about next. Now, before we go on, guys, be sure to subscribe to the channel and smash the like button because these videos do take a lot of time to make. And it takes a few seconds to show some love and smash the like button and subscribe to the channel. All right, so looking at BTC, once again, very sideways market. We've got the market holding below 106.6. 104.8 is going to be a minor level. However, as long as we're below this, we have that potential for a pullback, okay? I'm not going to sit here and say that it's going to happen, but we have that potential. Now, like I mentioned recently, I am still short from just above 111, which I also announced in real time in VIP. And I did add to that yesterday on this retest, okay? I also talked about this on X at the time. So I added to my short through here on that retest. So short here, added here, okay? Now, whether or not, whether or not we get follow through to the downside is yet to be seen, okay? But that is, in my opinion, the likely scenario, or at least my base case, as long as we are below 106.6 on the high timeframes. Now, if we were to see daily closes back above here, then I would be out of that short, okay? Because even though Bitcoin would still have to get above 110, this level right here, again, being the range highs from back here in December, January, the fact that we're trading back below any kind of reclaim on the high time frames back above 106.6 would potentially be bullish for BTC, okay? So I hope that's clear, guys. I mean, again, very simple. We do still have these wicks down here, right? We've got this wick here, we've got this one, which did get filled in here recently. But this area around 100K, obviously a psychological level. There's also some liquidity down here in this area. And then also, like I talked about in recent videos too, you've got this imbalance back here around 97 to 98. And the reason for that is you had this very aggressive move up and you saw a relatively shallow retrace into this candle, okay? So these two highs right back here, right around 97.7, this could be a target if we do get follow through to the downside. But like I said, guys, I mean, recently it's just been a big question mark in terms of where we go from here. But I still have to maintain my base case simply because the market hasn't invalidated that yet for me, okay? So that's really what it comes down to. Now, let's take a look. Let's flip over here and take a look at Ethereum, okay? And then we'll take a look at Tether Dominance and then the S&P 500 to wrap up. So Ethereum right now, what I'm eyeing at the moment is, obviously we have a trend line through here that the market is currently testing. However, if we just take this off for a second, because to be honest with you, I always prefer horizontals over trend lines. And really, I think that this market comes down to something as simple as this, okay? So let's look here at the 4-hour time frame. So what we had recently is we had Ethereum moving within this range, okay? Now it's still within this range. However, what happened back here is we got this little fake out, okay, on the 4-hour time frame. Now, at the moment, the market came down here, didn't quite test the range lows, and it's rallying once again, okay? So the question now is, where do we go from here? Is this just going to be a continuation, or do we get that move down here toward the lows? And one thing I want to point out, and I talked about this in a previous video as well, but one thing that I'm entertaining is the potential for Ethereum to come up here and fill in this upper wick. Okay, so on this candle, this is the candle that failed the range highs. And these highs up here, if you'll notice here, if you draw your fibs, and this is really interesting, guys. If you take your fibs looking at this upper wick, okay, now I'm going to snap this right to the high, right down here to the open. And what you'll notice is that this little 0.5, that is the 50% of this wick, okay? And it comes in exactly at these two highs. Now, it doesn't mean that we will get a retest there, but what it does tell me is that if we do get a retest here, it would satisfy a 50% retrace of this wick, and that right there could be enough to push the market back down here toward the lows, and then potentially get a retest of those range lows. Okay, so that is something to keep in mind here, that we could actually see Ethereum, especially with how, the market keeps pushing up like this. If we see a retest up here around 27.30, 27.40, in my opinion, that is going to be a significant moment for this market, and one that, like I said, could just end up filling this wick up here and then turning lower down here toward the lows, and then potentially down there toward 23.60. Now, the invalidation for this would be if Ethereum reclaims this area, right, closes back up here. That would invalidate that idea, okay? So hopefully that's clear. I mean, it's pretty clear cut at the moment. It doesn't mean, though, like I said, it doesn't mean that we will get a retest up here at 27.30. That is just one idea based on this wick back here, which these wicks like this do tend to get filled, okay? So we'll see if this is the case with Ethereum, if we get the push up here into this area, followed by that rejection, or if this ends up being a continuation pattern. So let's flip over now to Tether Dominance. So I love this chart, guys. I mean, if you follow me for a while, you know that I'm a big fan of the Tether Dominance chart, only because of how clean it is. This tends to move inversely to Bitcoin. So, if you're getting a balance like this down here, 4.37, which, by the way, we talked about this before this was even tested. And essentially, I was saying if Bitcoin's going to top out, it's probably going to be in this area. And that's exactly where it happened. And we've since had a breakout from the April trend line. Okay, so you can see that up here off of these highs, we have these highs through here. You can see resistance, and then we got the breakout. Okay, now at the moment, Tether Dominance is just going sideways. Okay, so again, it just makes it really difficult to know what to expect next. And, you could look at this back here and say, okay, well, we got the close back below, and therefore this is just going to continue. This is a failed breakout. But my experience with Tether Dominance is that it's not always an exact science with this chart. A lot of times you will get the market kind of closing like this, just below a level, and really this is more of an area, right? And I think that's how we should view it, because the other factor here is, like, if you look at the weekly time frame, right, and you look at this candle from last week, really, guys, this isn't a failed breakout because you look at this candle, right? These were your candle bodies back here, and this candle engulfed both of them. So I think that it's premature to sit there and look at that candle on the daily and think that, okay, it's a failed breakout and Tether Dominance is going to move lower, Bitcoin's going to move higher. I think that is very premature and a bit naive, if I'm being honest. I don't think that's the right way to look at this chart. It could happen, but I don't think that that is the base case right now, just given what we've seen here so far this week, okay? So as of right now, I am looking at this as a breakout, right? And this as a support area back here, okay? And furthermore, too, we did have an imbalance for this market down here off of this high, which we saw almost filled in there recently, right around 4.61. So we'll see if that's enough before we get that push higher. And the reason I've been looking for a push higher, too, from this market is, first of all, it did test 4.37 like we talked about, significant level here, so a bounce was expected. And furthermore, too, you can see that, just like with Bitcoin, we do have this massive imbalance back here from this candle. Okay, so we saw a little bit of a retrace here into this area on this candle, but, so far we haven't really seen much up here around 5%, okay? It doesn't mean that we will, but I do think that the potential is there over the coming days. All right, so let's take a look now at the S&P 500. If you want to know why the crypto market is mostly sideways, it's because of this market right here. Although I will say crypto has been relatively weak compared to US stocks. That can obviously change, but so far that's been the case, at least this week. Now, looking at the S&P 500, a few things, guys. First of all, okay, and this is where it gets a little bit confusing because you do have a very aggressive uptrend off of this low from down here, which, by the way, this area around 4,800 is something I talked about previously on X back here when the market was breaking down from a trend line that I showed. And this right here was a confluence of support that I also showed. I drew an arrow, in fact, down here toward this area. Got a lot of hate for it, and we ended up seeing that. I'm not saying this to brag, but just to kind of point out what we did talk about in the past, and that came to fruition perfectly. So looking now at the current price action, we have a few things happening. Obviously, very aggressive uptrend since April. So on the one hand, you have buyers in complete control, right? There's no trend reversal here just yet. Now, on the other, you have the market coming into these recent highs, and you also have these massive gaps down here. Now, gaps do tend to fill, okay? It doesn't mean that they happen right away. And like I always say too, these areas down here could become magnets, okay? Could is the key word, but you need a technical trigger in order to expose those. In this case, 5790 for the S&P 500 is going to be the critical factor. If we get below this, I think we're looking at, lower levels, okay? And obviously right now we don't have any confirmation of that. However, we do have the market coming into these recent highs and also struggling, a little bit up here in this area. But again, the question is, does this become just a range for the S&P 500 and then, get that move lower down here toward the level, break there and fill in these gaps? Or is this just a continuation? Is the market just going to continue grinding higher? And the reason I'm talking about this too, guys, is that this matters significantly for the crypto market. In my opinion, if you're trading crypto and not looking at stocks, at least even just glancing at stocks, I think you're missing out. Because, like, for example, if I take something like the Bitcoin index, right? So let's just plot this on here and I'll show you what I mean. So if I change this up to a line, you can see that, it's essentially the same chart, right? But you do get variances to where looking at stocks can actually give you a little, a significant leg up in some cases, or at least a slight advantage when you're looking at this market and seeing that, okay, we're ranging, we've got resistance up here. This is a factor. We've also got these open gaps. Like the old trading quote goes, right? Gaps are open windows and open windows get shut. So we'll see if that's the case here or not. Again, I think that 5790 is going to be critical though over the coming days. But again, I think if you want to know why the market's kind of stalled out a little bit here, it's because we have the S&P 500 coming into those highs. And really this is, in my opinion, going to dictate what we get from crypto next. If we see this sell off and start to fail up here again and come back down here toward this level, then you can expect crypto to start sliding probably pretty aggressively considering how weak it's been to US stocks. If it starts to grind higher and target, all-time highs, then that of course could keep the crypto market well bid. All right. So that is why we're seeing, markets kind of stall out a little bit, guys. I wish I could sit here and say that we've got these great conditions right now, but we don't. However, I do think that we're going to have better conditions for our trading competition coming up, because typically when you get markets just going sideways like this, you do get some aggressive moves after. Think about this back here, right? This aggressive move up. Think about this through here, aggressive move up. You can see what I'm talking about, right? So If we get that move down, it should be pretty aggressive here over the coming days. But again, 106.6 is going to be a key factor. All right, guys, keep it locked in here. Subscribe to the channel, smash the like button if you found it helpful. Don't forget to sign up with BloFin. Two things. One, claim your $300 deposit using the link below. Also, the other link below, sign up to our trading competition with a $10,000 prize pool that kicks off in the next 7 days. Trade well out there. I will talk to you again tomorrow.